Okay, so you have to determine two things. Like when you are trading the London session, you have to keep in mind two biases. Number one, what is the bias before OSS and what is the bias after OSS, and like between OSS and EO and AC, right? So
Yeah.
after we have drawn the OSS line and EO line, like all of these vertical lines, okay, these are known as a sessions line. Okay, after we have drawn the sessions line, then I mean these are basically known as a sessions line, right? These are the vertical
Yeah.
lines. I always draw it as a vertical dotted line, right? Because it gives me much more clarity. Okay. All right. So these are the vertical dotted lines. Okay, these session lines, OSS, EO, and LO, right? So once we have figured out, so let's suppose we have a case of accumulation. Okay, accumulation. Oh, sorry, distribution. Okay, so what will happen distribution, or what you have to do? You have to go to the 15 minutes time frame, right? As I told you, and you have to identify the distribution structure over here. Okay, what you will see, the first thing you're gonna notice whether it is a distribution or it is not distribution, right? It is distribution or accumulation, or it is just like a normal market structure. So how will you identify on a 15-minute time frame? Okay, once you see the market is like moving up and up, right? Okay, the first thing you're gonna see and watch out is the volume. Okay, if you see that the price has been moving in an uptrend during an OSS session, you have to see the high volume over here, where on these part on a 15-minute time frame. Got it? Extremely high.
Okay.
Got it? On the tops. Okay. If you see high volume over here, and then you see that as the price is moving up and the volume is declining, for example, the volume on this leg is high, and as the price moves further, the volume is declining, then it means that it's not really a distribution. Got it? This point is clear? What I need is like just before the OSS session at the highs, you need to see this high volume to make it to identify it as a distribution. Got it?
Okay.
Okay. So this is the first point. If you don't see distribution on a 15-minute time frame, then what you have to do, you have to shift to the 5 minutes time frame. Okay, 5 minutes time frame, and you have to repeat the process. You have to see the high volume on the market high before OSS on the market high. Got it?
Okay.
So this point is clear?
Yep.
All right. So these are the points to identify the distribution. Now there are various forms of distribution which I will tell you later in this video, but just keep this uh, like the structure in mind, right? Once you have identified the the distribution, if you have like whatever device, once you identify the distribution on a 15-minute or a 5-minute time frame before on the market high before OSS, then you have to mark the structure as like just before the OSS. What will be your bias here? Okay, so what you have to do once it's like, for example, it's a distribution, so you will see buying climax, right? You will see buying climax, OSS, all of these kind of things, right?
Yeah.
Overbought. Okay, so at the extreme high, what you have to do, you have to draw, like let's suppose this is OSS and OB, so you have to draw the straight line over here and extend it all the way to which point?
After LO.
Yeah,
New York.
New York Open, right? That's what you have to extend. NYO1. Okay, New York Open 1. Got it? So I think
Yeah.
that time, I think that is your 8:30 p.m. your time, right? Okay, so this is the basic structure here, right? So you have to extend the line. And then, of course, after that, you have to identify the AR. Okay, of course, because when we have the BC buying climax or we have this one OB over here, then we have to identify the AR here. Okay,
So let's say for example, if in 5 minutes I found a BC and OB,
Mhm.
do I find the AR in 15 minutes or
Five
I
minutes.
continue
Five
on
minutes.
5 minutes?
5 minutes. Okay. Now, AR is only confirmed. AR is only confirmed when we have the market approaching like this, back to this one. Got it near the high. We call it as a secondary test. Once we have this secondary test, only this then this AR is confirmed, right?
Okay.
Otherwise, what the market would do, sometime market would do what? It will go up a little bit and then it will keep on going down. So this is not AR actually. Okay, got it?
Okay.
You have to see the market approaching near this BC and OB level. Okay, yeah, it can now it can do two things. Number one, what it can do there can be three types of ST over here, three types of secondary test. Number one ST is when the market approaches near buying climax and OB, but it doesn't touch this BC and OB line. Okay, so we will call it as a secondary test with which one? Higher low secondary test. Got it? Okay.
Lower high.
Yeah, sorry, lower high secondary test. Got it? This is the first point.
Yeah.
Okay, the second thing it can do here is that it can go further up. And what kind of ST is this?
Uh,
ST plus UT.
Up fast.
Got it? This is the second part of
Yeah.
ST. All right. Now, uh, now you also have to do one thing. Okay, whenever the price is going up for the secondary test, as I told you, every time. Okay, once you are seeing the secondary test, okay, once you're seeing the secondary test, okay, you have to do one thing, right? There are two kind of secondary tests. One is a single line secondary test, okay, and I told you three different variants of secondary test. It can be the lower high secondary test, or it can be the secondary test touching exactly at this BCOB line. This is the second type of secondary test, and third one is when you have U. Got it?
Yep.
Okay. Now there are two kinds of most secondary tests. Okay. Number one is single line. Okay, single wave secondary test. ST. Single wave ST is when you have just one straight line, one straight up move going towards it. Okay. And then we have multi-wave secondary test. Got it?
Okay.
Multi-wave secondary test is very simple. What you're going to see here when the price is moving up, it will form a wave here. Okay, got it? Just like this. It will start forming these kinds of waves. So what you have to do, whenever you notice this, you have to draw this channel. Remember this. Whenever you saw this multi-wave secondary test, you have to draw the channel. Got it? And you
Okay.
also have to identify these kind of what? Mini oversold or mini what? M oversold or plus MOB. And then we have plus MBC, buying climax. Got it? These kind of,
So will
right? Yeah.
will AR will
Sorry?
AR have a multi-way?
Yeah, AR can also have a multi-wave. So AR normally, once AR has a multi-wave like this, so what you can do, for example, AR has a multi-wave like this. AR can also have a multi-wave. Okay. If AR has a multi-wave, you also have to draw this line here. Okay. For example, this is AR multi-wave here. Okay. And once you draw this channel here, like this, for example, you draw this channel here and you see the overbought and all of these things. So what you can do now, you can trade once the price retraces back and test it like this, right? So what you can do, you can easily, in such situation, you can easily trade until this point. Am I right? You can go for the short-term buy. Right or wrong?
Yeah.
Okay, that's all. So multi-wave gives you a short-term opportunities. Got it?
Okay.
And remember one thing, the price will always follow the multi-wave. For example, if you're waiting for the price to come back and touch this region, for example, here, you might say, oh, the price will come back here. Let me show you. For example, you might say, oh, the AR might form like on this point. This is the point where you think that the AR might form. So AR can be done like this. If AR form like here, and then AR can make a spring here, and then form going upside, right? Or AR can also just form like this, okay, and can form and go up, right? This is a second variant. A
Yeah.
third variant can be the AR can just stop exactly at this point and then again go up, right? And the fourth variant is if AR can form multi-way. Got it? So whenever the AR forms multi-way, what you can do, you can draw the channel, short-term channel, and then you can go for the long opportunity. But you have to exit right over this point. Got it? Once the 2R is achieved, you just exit. Got it? Any question?
Uh, no.
Okay. So that's how we have an AR here, right? Okay. So let's suppose we have an AR here. Let's remove this, right? And after AR, we have this secondary test, okay? OS, right? Now between OS, right? Between OS and this one, right? You see this OS. Now notice this part here. OS and EO. Okay. Between this, we have to see how the price is moving. The price can move between OS and EO in two ways. Okay, two or three ways. Number one way is that the price will move exactly in a range. Got it?
Yeah.
Right? This is a one way, right? So the price is just moving in a range. Okay. And then of course, because we have a bias here, this one, right? So we will follow this bias and we will wait for the price to make UT. Okay, and then we can go down, right? Short. Or if there is a higher low, so we can make a higher low secondary test, right? For example, UT here, something right here, or hidden upthrust, or even we can wait for the UT over here. Got it? And we can go for short. Let's suppose this is a UT here. We can go short here. Okay, this is the first point, UT. Or we can also go for, like I'm talking about the EO, right? Okay, and then the second situation, it can happen like this. What it can do, the price is making this EO, right? Okay. All right, so the price makes this one, and then the price makes a hidden UT over here, hidden UT, and then it goes down, right? This can also happen during the Europe Open or Asian close. Got it? And the third thing is the
Okay.
price can just break this structure, okay? And then of course, you know this, okay? Now here, the price can test this region. Now here, during this testing, during O and AC session, okay, the price can just, you know, this is FTI, right?
Yeah.
This is FTI, and after FTI, this one is what? LPS.
LPSY.
LPSY, last point of supply, right? Now the last point of supply can have 2 to 3 forms. Number one, it can just do the upthrust and then go down. Okay, UT of this line, AR line. Okay, number two, what it can do, it can form a multi-wave like this. Form down, and when it's coming for test, it can form multi-wave. Got it? So whenever the price forms a multi-wave, remember, always follow this wave channel. Don't follow this line. Got it? So once you see an overbought over this line, only then you will go short. Got it?
Okay.
Okay. So remember, so the point here is, got it? Multi-wave shorts are greater than the single move test. Okay. Now you might say, oh, the price might test this region. Yes, it might test, but the price will go further up because of this channel. Got it? And then it will form an overbought, and then it will go for the next resumption. Got it?
Okay.
Okay. Now, one more thing. Once you're done with this, right? We have this multi-wave and everything, right? This is the one situation. Okay. So this one is the pure distribution structure, right? Now, this sometimes what you're gonna see here, the price just, just goes up here, and then the price just goes on down here, right? And then the price start forming between OS and EO, you will see the price will form an uptrend, right? Like this, right? Between OS and EO, the price will move in an uptrend. Am I right? Many times the price
Yeah.
moves like this, right? So what are you gonna do? You're gonna do the same thing, right? So you're gonna draw this structure here, right? Okay, whenever you see a multi-wave structure here, you just draw it. And now, if you see the price, once the EO open and you still see the prices between EO, like the prices between the channel, then you can still, and you see a long position here, then you can still go long. Am I right? You can still go long. For example, we have this structure here. We have a spring and you can still go long. But remember, always exit the trade once the price reaches this upper part. Got it?
Okay.
Yeah. Wait, hold on, hold on. Isaiah? Hello?
Yeah.
Yeah. You got it? Did you
Yep.
get
Yep.
my point what I'm trying to say here?
Yes.
In EO, for example, the price, this happened on Friday, remember? Okay. This happened on
Friday.
Friday.
Okay.
Yes, Friday. I will show you right now. Just let me show you. Okay. This exact situation happened on Friday. Let me go on 15-minute time frame. Okay. And that's it. So what I'm trying to say is that you don't have to learn every pattern. You have to think logically. Okay. For example, this is multi-wave, right? Can you see multi-wave? What you have to draw?
Yeah.
Low. This is you see higher low. Just draw the channel. That's it. Straight away. Draw the channel. And when you draw this channel, you can easily identify the points of. Can you see?
Yeah.
And you see the high volume occurrence here? Yes, we have the high volume here. You can see here. High volume here. Just draw it. Up thrust. Go short. Simple. Go short. And now, again, when you have this one here, what we see here? We see a multi-wave here. Draw the multi-wave channel. Okay. Right. We draw it. But we see one more thing here. What do we see here? We see shortening of the thrust here. SOT bars, you can see SOT bars. And you can draw easily
Yeah.
this part here. And now let's go long, right? And now once the price, you have this line here, the price is coming back to this region. So what you will expect? This is buying climate region. You will expect the price to go down. Simple. That's the logic. Got it?
Okay.
Yeah. And now here we have shorts, but now you have to identify here which one is more stronger, right? The
Actually,
accumulation is more
the
stronger.
SOT,
Sorry,
the SOT,
SOT here.
where are the lows?
This is low, low one, low two, low three.
Okay. Hmm.
Okay, SOT can be, it's not
Hmm.
like, okay, SOT can also be like this, right? SOT can be one like this kind of structure. This one, you have this
Okay.
like key reversal bar, and then you join this key reversal bar and find the second, third touch here with three touches, and then it goes up. So this is SOT. And you can see here
Okay.
is also SOT. You can see here, SOT here, forming here, right? If I don't draw this line, this is also actually SOT. Right or wrong? This one here, you see here, the price goes up and then it's SOT, right or wrong?
Yeah. Right.
Right? And again, the SOT matches exactly same as the channel. That's it. You see this, draw the sign. Got it. Here we have a multi-wave channel. Draw it. So when we have a multi-wave channel, what would you expect? spring, test, what do you expect? The price will go up, right?
Yep.
See here. Now, here, SOT. Can you identify SOT here? This one, this one, this one. SOT. Now, this, what kind of SOT is this? Rounding SOT. See, now, third touch, SOT went up. Right or wrong?
Correct. Yeah.
Okay, so that's what I'm saying. You have to understand all of this structure here. Okay, so this structure which I was explaining you on the whiteboard, can you see my screen, right?
You haven't switched to whiteboard yet.
No, no, I'm talking about the screen.
Okay. Okay.
Okay, all right. So here we have, now let's draw the, just think very carefully what you are seeing on the structure. Now, where is your OSS for Friday? Here, right? 3
Yeah.
a.m. OSS. Okay. And what do you see more now? Where is your euro open? EO. Wait, hold on. I know. This is 2 p.m. Okay. Right? And then the
Yeah.
third one is London close, London open. Hello. So what are you going to do? First of all, what I told you, you have to identify the bias before OSS, and then you have to identify the bias before what you are seeing
Before
here.
EO.
Yeah. So what you are seeing here, before this one, what do you see? The price goes up here, but you see the declining volume. Can we see?
Yeah.
Now switch to the 5-minute time frame and see if you can see any high volume. No. Again, we see the declining volume. Can you see?
Mm-hmm.
So when we see the declining volume, we have to see the previous structure, where the price is coming out from. The price is actually coming out from the accumulation, right? And then as
Yeah.
the price goes up, this is a declining volume. So it simply means that this entire range is actually what? Before this is re-accumulation. Got it? Simple as that, right? Did you get my point?
Reaccumulation or redistribution?
This one, re-accumulation. Accumulation,
Okay.
price goes up, re-accumulation. Okay, now
Okay.
let's draw the
Okay.
structure. Now we did not see any high volume here. Now see this area. Did you see high volume here? Yep.
Yes.
We can also identify the SOT here very easily.
Yeah.
We have the SOTs here, right? So I will not draw the major structure. If you want to draw the major structure, you can draw. This is the first higher high. Okay. If you draw this structure here, this one from here, the first lower high was from here. Okay, if you draw the structure like this, you're gonna see it between this and this, right? And now we have to draw the SOT line, the dotted line. Okay. Okay, SOT line, one touch, second touch, third touch. And when we have third touch, we can draw what? We can draw this line and identify it as a buying climax, right? Selling climax. Okay.
Yep.
Selling climax. If this is selling climax, so when the price goes above here, this point, what is this point? AR, right?
Yeah.
Yeah. So we have this AR, and you see where the price is breaking up to the upside, you have increasing volume, right? Okay, so this whole structure is what? This whole structure is what?
Reaccumulation.
The accumulation, right? Okay. All right. We just draw this reaccumulation structure. We have some pattern of
Where's
spring.
the
Sorry.
where is the increasing volume that you mentioned?
Okay. This increasing volume. Okay. Then we have this shorts here. We have this huge volume with an average volume, right? Okay.
Okay.
And if you want to check further, go to the 5 minute time frame. See it. Okay. You can see here we have increasing volume. Am I right? See here,
Okay.
increasing volume, right?
Mm.
Yeah. And then after this structure, what do we see here? Okay, we have identified it. Okay. And this is spring, obviously, spring, test of spring, right? When very, very huge volume to the upside, and then the price went up, right? Now the OS session has started. Right or wrong?
Yeah, correct.
After this spring, when is the first higher high? First higher low after the spring. This one?
Yeah.
So you start drawing the channel from here, right? You start. Now, the bias right now is bullish. Remember that because of the this reaccumulation process. Here, we draw this now, and we have to remember that once the price reaches this area, we have to drop it. Okay, now what's happening at the EO? Hold on. Hello.
Hello.
Hello. Yeah, sorry. Okay, so some guest came, so sorry. All right, so just switch forward to the 3 minute time frame, you can see. Okay, and the entry over here, EO. Now the EO, this is where you were trading, right? Remember? The EO opened like
Yeah.
this, and then you said that it's in spring here, and then you were trying to trade,
Yeah.
you were trying to testing, but the price had already, you know, the price was about to reach this overbought over here. So you have to remember this. And if you are trading it, then of course, when the price becomes overbought, you can't trade like this because your bias is short. Got it?
Yeah.
Got it? Yeah. So
Yeah.
accumulation was here. Until here, there was accumulation. But as soon as the price becomes overbought here, and then the testing, and then the price became like, and then the price tested over here. Okay. You see there's a EO. All right. And now the price is within this range, you can see within this trading channel. So you can always trade it like this. Okay. All right. And then, but you will not get a high risk to reward ratio. So even if you are in a trade, you must exit once the price becomes overbought. Got it? And now once the price is overbought,